shall we get the party started, ladies and gents? Let's do it. All right, welcome. I'll let everyone join in and log in. I've been sitting in the waiting room waiting for me to start this. We're ready to go. It's going to be a good one. I have just been, look at this book, actually. Can you see this one? Not one I think I've shown anyone before, because not really one I've really looked at too much, but I bought this one a while ago. It's called Spy High Quality Trading Strategies, and it's by Core Ready. So this guy has done lots of statistical analysis and quantified movements in the market. So I was kind of looking through to see if there's anything on elections here. There's lots of stuff on economic data points like non-farm payrolls, that type of thing. If the S&P 500 has been up for 3% 3 days in a row, loads of little nuances like that. And he's got loads of statistics where he talks about different things. I don't believe there's edge just in this. I would never kind of trade and say, well, actually, look, if we have 4 days in a row, we do this and do that, and history has shown we've done this. That's not my thing. But I think sometimes just knowing if there is a slight tendency for the market to do something other than something else can mean that I'm aligned in that direction. So if I kind of find a pattern, and not necessarily from this book, but let's say Santa Claus rally, right? Often market's going to rally from up until Christmas. Some people say it's up until Christmas Eve. Some people say it's from Christmas Eve until New Year. It tends to be a year-end rally. If you've had a genuinely decent uptrend throughout the year, statistics show, or history shows, that tends to continue through December. So rather than just going long in December, I would normally say to myself, okay, well, if I get on I'm only going to trade from the long side, number one. And if I get on a trade, I'm going to kind of hold it a little bit longer than I normally would do. That's how I use this type of thing when I see research and seasonal analysis and statistics. I say, okay, well, how valuable is it, and should I kind of align my trading with it? So do I recommend this? I mean, yeah, listen, if you've been buying trading books like me, maybe you do want to buy it. It's a bit dry in places. It's a purely statistical book. But anyway, by the by, let's go on and talk about this webinar, ladies and gents. Are we all on board? I think we are. Let's get rolling. Cultivating confident trading. This is super important. This might be the most important webinar of the year. And it's not even shouted. We haven't even shouted much about this one, because I think confidence is such a key part of trading. Very difficult to get confidence if you haven't got the performance and results to back that up. And so I'm going to try to help you with that today. And I'm going to share with you some ways that I think you can build confidence without relying on your P&L, how to disconnect yourself from P&L a little bit, some of the habits and standards that you can do to cultivate confident trading. I've seen this work with developing traders. It's worked for me. So hey, why not share it and see if it's valuable for you? As usual, we will talk for around 45 minutes, ladies and gents. And then if you want to ask a question, you're very welcome to. If you have a question that you later comes to your mind, if you're like me, when you're out doing bits and pieces and you suddenly think of something to do with trading, you're very welcome to email me. If you subscribe to my daily email, you can reply to that, and that question will get to me, and I do my very best to answer all of those questions. Okay, before we get going, please remember, if you're trading spread bet CFD products, you're trading with leverage, you're trading on margin, you've got a high risk of losing your money. Double-edged sword, I like to say. You can win a lot, and that's one of the things that attracts traders to the game, right? You can say, hey, it can put down X%, and that really amplifies my gains, but it works the other way too. If it goes against you, you're going to amplify your losers very, very quickly. And so just be aware of that. Please, if you are new to trading, please understand what you are trading, how you are trading. And I know that you guys are experienced. Sit here and go, Mark, you always say this, but I just would love people to really only get into trading if they know what they're getting into, right? Because you know, and I know that it is a risky business. We know there's a lot of upside there, but there's a big chasm of downside if you get things wrong. So please be aware of the risks. And make sure that it's for you before you get rolling. Okay, so happy with that? Let's go. Great quote here from Theodore Roosevelt. Believe you can, and you're halfway there. Kind of makes sense, right? Doesn't it? Oh, one thing I should say actually before we move on. Tomorrow night, I believe it's tomorrow night. Pepperstone talks. I think Michael Brown's doing this. He will be doing an election special, and next week I will be sharing with you my election playbook. I've been working on it today, working on it probably tomorrow as well, thinking through ideas and markets to observe and different kind of approaches to look at for different permutations. It's quite complicated, this one. Going to be lots of spice. So join me next week for that. But there's also Pepperstone Talks. I think Michael Brown's doing the one tomorrow. So join that as well. He'll have a completely different approach to it. And he's far more finger on the pulse with the economic stuff than I. But I will talk about technical things, strategies, ideas, and stuff next week. Okay, so reminder very quickly. We'll run through this quickly, guys, and get to the meat of it. I promise you, I've got some experience in the markets, but I don't have all the answers. I started trading in 2001. Mark has been kind to me, but I don't know everything, right? I don't pretend to know everything, but I'll share with you things that I think are effective, things that have worked for me. And also, as I run Traders Mastermind, I see traders developing and coming up through the ranks, going from struggling to kind of making things work. And so I observe and see their thought process, how they talk about the markets, their strategies and stuff, so I can see kind of the life cycle of a trader, if you like, going from struggling, developing to actually coming through and putting some green years under their belt. So I'm quite well positioned to share that knowledge with you. And that's where I come from. I come from a place of, hey, I'll share with you what I think is valuable. You take what you think is of value and you discard stuff that you don't think is valuable. And that's fine by me. Always do analysis, research, homework, etc. I'm not talking about strategies so much today, but if we do talk about that I want you to make sure you go and dig in for your own make sure you're happy with what you're trading and you make your own decisions. Things take time. If you're going to make a change, and I say this every single week because it's important, if you do make a change to your trading, make the change, commit to it, and then make some course corrections and adjustments after you stuck with it for a while. Too many traders hold my hand up, did this in early years, would go all excited and motivated, and off you go on Monday, try something. I didn't work on Monday. Well, I'm going to discard that and go back to something else. Just stick to something. And you can decide not to do it later on if it's not for you. But I think just sticking it through for a certain period of time helps so much. Oh, a few more have jumped in. Welcome if you are here. I don't know why, maybe it's clogged up in the room. But anyway, we haven't really started stuff. You just missed the risk disclaimer, which hopefully you know already. Okay, so excuse me, yeah, an election. Oh god, it's going to be exciting. There's so much activity, so many things to look at. Can't wait to share with you next week. But yeah, it's going to be fun. Right. Anyway, before that, let's get our confidence on point. So, do any of these describe you? Hesitation when you see your trading signal, overriding rules in the heat of the moment, performance is less than you think it should be. Maybe you've got the knowledge and experience, but you can't put the rubber to the road. Are you not holding trades and mismanaging winners? Well, that's okay because a lot of that stems from confidence. And today I want to take you on a short journey through hopefully giving you some ideas and insights and tips into cultivating that confidence that you need to execute. Because I have this discussion sometimes with Peter, and Peter is in Traders Mastermind. He's been trading even longer than I. We always you almost have to dance on the area of arrogance. I know that sounds wild, but you almost have to do that as a trader. Like, I believe this trade is going to work with everything in my being, and I'm committed to pulling the trigger and taking the trade, but I've got to stop there just in case it doesn't. So you've almost got to have that extreme confidence in your ability to trade, your extreme confidence in the setup that's going to work, but still having the risk managed. And let's not confuse confidence with gun-ho, kind of just wildly swinging, taking any trade you want, adding to positions, all that type of stuff. No, that's gambling. You want confidence in our ability to execute, confidence in our edge, which we'll talk about more in a moment, confidence in that, but at the same time, the risk has got to be managed. It's a fine line. I know it kind of sounds like a bit of a nonsense thing to say, but that's where you kind of want to get to. You want to get to the point where you do have yourself, you're flooded with confidence, but you also understand that the risk has got to be managed and you're managing that. So you're not just saying, I'm confident that this trade is going to work regardless, and I'm just going to put all my net worth into this and see what happens. No. It's more subtle than that, but hopefully you kind of get the difference. Okay, so remember, maybe you're a car driver. I'm pretty sure most of you are. Remember your progress as a car driver, or maybe you've done something else. You ride motorbikes, or maybe fly planes. The process is always the same when you get into that car. right, or into the cockpit, you've got so much to look at. You're like, oh my God, what do I do? I've got to operate the vehicle. I've got these pedals. I've got this. I've got that. I've got these stalks in the steering wheel. I've got these mirrors. I've got this. I've got to understand it. And you're just so overwhelmed, right? You're so overwhelmed in the beginning. You've got to operate the vehicle. You got to navigate yourself. You got to go on the road, or if you're flying, you've got to look at your map, haven't you? Got to look at your heading. You got to be on the radio. If you're in the car, your speed, other road users. It looks so much, right? But now you're confident and you developed intuition. You're probably driving, you go from A to B, you know where you're going, you know how to operate the vehicle, it's second nature to you, and you're there, and you're scrolling through your Spotify watch list, your playlist, you're listening to podcasts, you're kind of drinking coffee, you're having a chat on the phone. It's just normal, right? You're confident that you can get from A to B. And the other thing is, you're confident that you can get from A to B, and you don't worry about there being any setbacks on the way. Like if the road's closed, you'll just navigate around it, right? If something happens, you will address it when you're there. If you're going down a single track road, you know that you don't not go down it because you might see a car coming the way. You just say, I'll deal with it. I'll find a place to pull in. I'll deal with it. Trading's a lot like that, right? You develop the confidence. It becomes so much easier to execute during the trading day. And you know that, yeah, you might not become the very best driver, the best racing driver out there, but you know you can safely get from A to B, and you will deal with any setbacks that come along your way. And that's the confidence you want to build as a trader. You know you will get to your destination, your goal, your short-term goal, more on that in a moment, medium-term goal. You'll deal with setbacks along the way. And having that confidence is just so, so, so valuable in trading. I don't think you can become the trader you want to be without that. So, think about intuition as well. We talk about intuition from a trading perspective, being able to experience the chart, experience using your experience to build that intuition. Now, some people go, "Oh, intuition, just rubbish. You can't trade on intuition." I beg to differ. And actually, if you look at some of the performance from, top traders, money managers, CTAs, etc., you will find the discretionary guys and girls have a much better performance generally speaking, than a fully systematic approach, because we do develop intuition. You've got it as well, regardless of how long you've been trading. Sure, in the early days, it's less intuition, and more kind of gut instinct of, I don't really know what I'm doing, just like in a car, right? But as you get more experience as a trader, you'll develop that intuition. And if you think about in your car, you're driving along in a car, you go, hang on a second, I'm just going to hang back because I feel like that guy's going to come across into my lane. And sure enough, he comes across into your lane. And how did you know that? Right? You didn't know that. It wasn't indicating or anything. You just took in a lot of the information. You were like, oh, I saw him earlier, kind of a bit hesitant about where he was going. Maybe the type of vehicle that's being driven, the way it's being driven, the subtle positioning on the road. Maybe you took a glance, you saw him in the mirror, kind of looking around, not knowing what he's doing. Maybe he's distracted. All those little things, subtle clues that you take in, allow you to use that intuition to dodge that potential accident, right? So it's experience miles under your belt. You notice subtle clues. Trading is exactly the same. We need the experience to grow, right? And you need good experience to grow, and that builds the confidence. But we can fast track it, because what we don't want to do is say, well, if I've got to be trading for a decade before I get confident. No, no, no. We want to kind of build our confidence so that the P&L will follow naturally, because a lot of people mistake performance or P&L with confidence. Like, it's okay for you, if you've got these lots of seasoned decent numbers under your belt, you've got year after year green, you've got this and that, you've got P&L to look at and say, well, I'm confident because my P&L. And that, I'm sure you want to get to the point where that helps, but that doesn't mean you have confidence. You get confidence from elsewhere, and P&L follows. Okay, if you think about confidence like a bank, right? Confidence like a bank. If you are making withdrawals from that confidence bank, you are not going to be really confident. I want to use that word again. I kind of trying to think of something a little bit better. You're not really going to commit and flood yourself with certainty when you take the next trade. If you are breaking your rules, if you're mismanaging trades, if you have these near misses where you add to a trade, or you kind of do this and do that and get away with it, you just can't take little withdrawals away from your confidence bank. You'll just take a little bit, and so it's just run dry. And so when you do come into a trade, your setup is there, your filter criteria is met, your trigger criteria is met, and you say, I want to take the trade, and you second guess it. But what about this? What about that? And the trade's gone. you get frustrated, you don't have the confidence to execute. So we need to build that confidence back up. And like I say, this is not P&L. P&L is going to help later when that comes into play. Sure it is, because when you go through some stagnation, you're like, hey, I've got a decade's worth of experience, 2 decades, 4, whatever it may be, 5 years, 2 years, and I've come through drawdowns before, always before. You're not going to worry so much about them. But to get to that point, you have to kind of build your confidence bank. So how do we make deposits in our confidence bank? So we really want to think about the most normal things in trading, the things that we all say every day, all day, every day. Just developing a process that you can stick to, belief in the journey and the goal. I think most people do fall into this category of they're into trading because they believe they can make it work, they can believe they can hit the goal. Fine, I don't think you'd be here. There's a small section of people who, when they really ask yourself, do I think I can do it? The answers might be no, and that needs work. Like, that needs work. You need to believe you can be in the top 1% of traders, in the top 5% of traders, in the top chunk of traders that are going to get you to the goal you want. You have to have that there. Otherwise, you're not going to do it. And that's the same for any endeavor, right? Someone who's an athlete, or someone's an artist, or someone's a business person setting up a startup, whatever it may be, they have to have belief that that's going to get to their goal. Otherwise, when things get tricky, and they will, and you've experienced that yourself in trading, it gets tough sometimes. You just want to cry, you want to shout, you want to scream, nothing is going your way. The belief to get back up and keep pushing and keep sticking to the process and believe it's going to get better is the separator. That is the difference. And that's why so many people struggle, because it's such a difficult journey in the first 6 months, 1 year, 2. But it gets easier further down the line because you have the confidence that you've built up over time, and the P&L, obviously, and the performance that you can draw on as well to help your confidence. So having that belief is so important. More on that in a bit. The standards you operate from. So we'll dig into this because this is so important. But how you operate as a trader, how you conduct yourself as a trader, what you do before you take a trade, how you analyze your trades, all this stuff is so important, because your subconscious knows, right? If you're like, I kind of took this trade today and I didn't really do my pre-market prep. It didn't matter because it was a winner. You know, deep down, you know, that's not the standards you need to build the confidence. And the P&L, like I say, is not proportional to confidence. We'll look at a great example in a moment. It's building that, stacking those deposits. I'm sticking to high standards. I don't take trades outside of my trading plan. I stick to my risk rules. I don't trade on the phone randomly. I make sure that I'm define my stop. Whatever's important to you, everyone's different, right? There's some general rules I think that are valid for everybody, risk management, all that type of stuff. But it's just sticking to that process. That builds confidence. You can't go through a month worth of sticking to your process and not feel confident at the end of it. You're like, hey, I'm doing the right things here. I need some tweaks and adjustments. Maybe my P&L is not where I want it to be, but I'm actually making those regular deposits every single day into the confidence bank. Let me go back. Here we go. So this is the really good example. And this is why I want to dispel the myth that P&L breeds confidence. And I've seen traders do this before. Let's say you made 50 grand last month, right? Just that number's out there. Because for most people, that's kind of would be a good month, right? 50 grand, 50,000 pounds. Okay. So imagine you did that. But imagine that came from a lucky trade, right? You broke all your rules. Let's say you broke all your rules. You added to a loser. Let's say you were trading China on the long side. You added it. All of a sudden it came out. Whoa, great. You know, we're going to add some stimulus, and you got in, just skimmed your stop loss and then ripped high and you made 50 grand, right? Okay, extreme example, but I do know traders who've done this. How would that make you feel? You might be, if I'd said, okay, 50 grand your trade, oh yeah, I'm well confident from that. That makes me really confident. But if it was from this, and I know it's an extreme example, I appreciate this, but imagine some sort of permutation of this where you broke your rules, you didn't really stick to your plan, you swanned into the trading day, you kind of picked something, traded it, you didn't have a strategy, you wouldn't feel confident, right? You wouldn't feel confident in your trading abilities. Deep down, you'd be like, oh, you know what? That was a good month, but I don't think I can repeat that. I don't have a confidence I can repeat that because it was luck. And some traders do this, and I know one trader who did exactly this and quit. He was like, you know what, I got damn lucky, and I'm not cut out to be a trader. I'm gonna just cut my losses and get out of here. But most people will come in who do this type of thing, and they go, you know what, they deep down they know that's not the way to trade, and inevitable happens that goes back to the market. right? You don't want to do that. And that's why I want to kind of disconnect the P&L from confidence, because I think this is an ingrained belief that many traders have coming up, that I need to see the P&L to get confident. I can't, why I just can't see the results. Yes, I'm telling you that does help. Of course it does. But there's more you can do to support that before that kicks in. So what about another scenario, right? So what about if you made 10% of that number? So 5K. Imagine you made 5K. I'm just plucking these numbers out of the air, by the way. I'm not, just hypothetical examples here. And they could be many order of magnitudes lower for you or many order of magnitudes higher for you, depending on your risk tolerance, et cetera, right? So imagine that you made 10% of that number. So you made 5K, right? It's not 50K, it's 5. But if you'd stuck to your process, right? If you kind of really execute it with precision, if you'd navigated those setbacks easily, if you'd done everything really well, you'd acted really in a kind of high level, high standards. Yeah, your financial bank has less in. It's got 45 grand less than the other guy. But the confidence bank has way more. And that's the difference. If you're making those deposits to your confidence bank, it's not the P&L that matters, it's the process. And you know this as well. You would, if you put yourself in those shoes, you'd be like, you know what? Yeah, part of me is like, yeah, 50 grand will be great for 1 month. But actually, if you're in this for the long term, you prefer the 5 and to build the confidence, knowing you could put another 5 in and maybe another 10, maybe another 20. Maybe you could put that 50K in further down the line and have the confidence to go with it, so that both your confidence bank is elevated and your financial bank. And that's important to think about. So what's the kind of confidence formula, if you like, if there is such a thing? I think you've got these three things, right? And this is the kind of it's just as simple as this. And like all things in trading, it's simple, but it's not easy. So we want our thoughts and actions to be aligned, and we want our standards to be high. Okay, because every trader trades differently, right? And if you kind of look at some of the top traders out there who've got some exceptional track records, who have got exceptional longevity in the markets, they all trade differently. No two traders trade the same. You never see two traders trade the same. Market Wizards is a great example, right? Market Wizards series traders are picked out, they're verified. Jack Schwager does all his due diligence, and they all trade very, very differently. You've got some people trading with the commitment of traders report. You've got some people kind of trading intraday technicals. You've got all different stuff, right? But the commonality is that they have high standards for the way they operate. So they say, well, I always screen this. I always make sure I check this. I always do this. I always, and you can hear it in their voice. I always do that. It's something that is so meaningful to them. It has to be elevated. And you think about someone in another sector like fitness, right? And I kind of touched on this, I think, in the last webinar. Someone who's extremely fit and athletic and has got, is in great shape. They have high standards. Like, of course, I don't eat that. I always do this. I always make sure I have my protein allowance. Whatever it might be. Right? It's the same in trading. You have to develop high standards because we are competing against some of the best in the world. We can't be messing about half-heartedly, slovenly coming in expecting things to work. Our standards have got to be high. It's a free thing to do. It's not an easy thing to do, but once you get them there and you see the impact of that on your performance, you will want to do it all the time. And you will take pleasure in the fact that your standards are higher than all the other traders right? You will say, well, I deserve to win because look at the preparation I do. And I'm not saying you do stuff just for the sake of it and you're there for hours and hours doing those of pre-market prep for no reason. That's not what I'm saying. But you have these standards that you stick to. Like, I only trade this market. I only trade this, and this. I stick to my rules. I do my this. I make sure I read a trading book a month. Whatever it might be for you, when you have those standards and you stick to them, then you're just going to be in a much more elevated position of confidence. It automatically gives you confidence. Allocating resources, time, money to your trading just automatically elevates you and your actions and thoughts. So, and this is a kind of a little bit of a similar topic, if you like, to something we discussed before. But if you're thinking, hey, how my standards are high, and if you are doing it and your actions and thoughts are aligned and your standards are aligned, this is when you start to believe it, your confidence starts to rise, your results start to improve. And it feels a bit like, oh, is it a bit woo-woo, like, oh, I've got to think it to believe it and all this kind of stuff, and I've got to stand in front of the mirror. No, you just know, and probably other areas in your life, if you identify with something, your standards are there and your actions are there and your thoughts are there, I'll use the analogy of like, someone who's in great shape. They think like an athlete. They eat like an athlete. They train like an athlete. Their standards are high, and the results they get are they look like an athlete, right? They're in great shape. They're all this type of stuff, whatever it might be, whatever great shape means to them or to you, that's how it works. So here's some steps. I've got a multi-step process for you to help you kind of gain this clarity, gain the deposits in the confidence bank, improve the confidence. It's all very well me standing here saying, keep your standards high, traders, and you make sure your thoughts and actions are aligned. It's not enough, right? I'm going to try and give you something tactical, operational that you can deploy day to day, including in a minute the 5 hours of recovery when you come back out of a dip and a slump, which we all do. Okay, so step one is you need to become crystal clear on your objective. Too many traders are like, I want to make money. And that's the equivalent of getting into a cab and going, driver, take me somewhere. He's going to look at you and go, where do you want to go, pal? Somewhere. Yeah, but north, south, give me some direct, just take me somewhere. He's just going to kick you out and say, get out of here, pal. And I'm going to charge you 10 quid just for wasting my time, right? Just have the objective, I want to make money is not enough. It's not going to work. What type of trader are you trying to become? What are your goals? Random thumbs up there. What are your goals? Long term, medium term, short term? Long term, medium term, short term. Where are you headed with trading? Where do you want to be? And some people, I think, blend this incorrectly, and they're kind of there, they're scalping away. And go, do you want to be a scalper? Is that what you want to? You want to be sitting in front of the screens? And some guys are like, yeah, I love it. Fine, that's great. And some people are like, well, not really. I kind of did this because I thought I could, spend a little bit of time in front of the screens and kind of hold trades a little bit longer. Okay, well, what type of trader are you trying to become? Why don't you work towards that? Why are you getting distracted with something you think there's money there when actually that's not the trade you're trying to become at all? And that's a kind of a very specific example, but I see that quite a lot. What are your goals? Short term, medium term, long term? You can't work, towards an unknown destination. The brain doesn't work like that. I've studied all these different people who are, well into kind of stuff that's I barely understand to some respect, like psychologists and wiring, how the brain's wired and the blood flow and all this type of stuff. And I look at it and I take away things that I think are valuable. But what I have taken away, and I'm not a psychologist by any stretch of imagination, I don't understand neuroscience and all this type of stuff, but I do understand how I can relate to some of the things that are said. And I know that if you are grinding and pushing and shoving and doing all the stuff you need to do to move forward, if you don't have your sat nav locked on a destination, you will never get there because your brain goes, I don't know where he wants me to go. He wants me to work. Okay, I work. But then what are you trying to achieve? So you've got to have crystal clear, be crystal clear, should I say, in your objective. Okay, so I won't bang on about step two because I think people say that Mark always talks about this. It's free. It doesn't cost you anything. I talked about the full process of this last time. I won't go over it too much. You've got to visualize the goals. You've got to see yourself with the goals. This is how to boost the confidence. What sort of trader are you becoming? How does he or she conduct themselves? Your routines, your process, your response to mistakes. This has to be done. I don't think you can do this without. Now, some people do it very actively and they sit there and they visualize. And I talked about this last time about making it brighter and all this type of stuff. Yeah, fine. But I also think that some people do it without knowing, and they're like, oh, I don't visualize. But actually, when you ask them, you say, yeah, but did you see yourself putting 20 million in the bank on that year? Well, actually, I thought, I kind of thought, you did then. Well, I didn't sit there and imagine. Oh, yeah, but you kind of, you saw yourself with that. Yeah, I did. There is something to this. So visualize those goals. What sort of trader are you becoming? How are you trying to develop your experience levels? How are you trying to improve the P&L? How are you conducting yourselves? What are your standards? That type of stuff. Okay, third step is, now you've got clarity on your heading. You go where you're going to go, type of trader you're going to do, what your objective is. And by the way, be careful about making this a financial objective because it's very difficult to control. Now, I would say to you, if you're more experienced, then fine. I think as you're more experienced, you can go, okay, is that reasonable with the conditions are in now, with what I'm doing and my strategy, the efficacy of the strategy based on this, is that reasonable? And you can kind of base it on experience. And you go, okay, fine. But if you aren't there yet, be careful about using a financial goal. You want a goal of, okay, I want to be consistent. I want to develop a basket, 3 strategies in this with this time frame that I have a consistency level of a 50% win rate and a kind of 2-to-1, whatever it might be. That type of thing. I want to be very disciplined. I don't want to be second guessing things. That's much more of a worthy goal. And again, like a lot of the things in trading, the P&L will follow. Okay, step 3 is crafting a plan. So now you're clear on where you're headed. You've locked your sat nav in. Work out how you're going to get there. Just like back to the car analogy, if you're driving from London to Edinburgh, you would say, okay, how am I going to get there? You wouldn't just get in the car and drive out of the station, drive out of the car park and go, nowhere to go. Because you're gonna get completely lost. Right? You know, how do I get there? Okay, well, I need to get out of here. I need to go out and join the M1. Let's go up onto here, hit onto the M6, whatever it might be, right? You have to know how you're going to get there. So, from a trading perspective, I believe you need 3 pillars: a strategy with edge, which is an absolute essential, solid discipline, absolute essential, and risk management, absolute essential. If any of those 3 are faulty, the structure cannot hold itself up. And you know this. If you're trading with a solid discipline, your risk management at some point, but you've got no edge, you aren't going to make money. You know, and actually, I see traders with a lot of the times with 2 of these 3. It's like the number one thing is to identify which of these is missing and then work on that. A lot of people think it's discipline when actually it's strategy with edge. A lot of people also think it's, "Oh, I've got a strategy with edge, but actually not sticking to it. So it's discipline." I think people sometimes confuse it. And maybe if we go off on a tangent slightly, it's worth you just auditing where you are in your trading. Does your strategy have edge? Do you have the discipline to stick to it? Are you using adequate risk management? Because if you've got a solid strategy and you've got good discipline, but you're taking way too much risk on certain trades, then just the nature of the beast and the numbers mean that you're gonna kind of end up blowing up, or you're gonna end up in massive drawdown. That's very often why people with very, very small accounts struggle, because their risk management, they might have a great strategy, they might have solid discipline, but it's just luck whether the next few trades take them out of the game or not. So really thinking about that, craft your plan, build your plan around those 3, get that strategy with edge. And I've shared with you various different strategies and setups that you can look at. There's other stuff out there as well. You have to look at the things that I've shared with you. You know, a lot of these things have edge in the right context, and the context and the setup, putting those together will give you edge. Then you work on your discipline. For many of you, that's the only thing to work on. It's like there's no point in me even looking for a strategy with edge, because I can't stick to anything. And you have to prove you have discipline first by sticking to a very, very simple strategy. I talked about the coin toss drill before, something that you're just doing to exercise discipline. Get that on point, get the strategy with edge, get your risk management dialed in. Now you're ready to go. Now you can move forward. You lock in that goal and you move forward relentlessly. But you have to have those 3 first, or you'll wobble, you'll fall. It's like a 3-legged stool. You might get a bit of balance, a bit of traction, but if one of those is lacking, the whole thing crumbles and you have to start from scratch. Okay, so step 4, thoughts and actions in alignment. So be the trader you are becoming. This is the tough bit. This is the tough bit. Sticking to your process. Whatever your process is for you, are you doing a pre-market prep? Are you doing a daily performance review? Are you educating yourself on other aspects of trading you think are going to add value? Are you reading trading books? Are you doing this? And not just on a whim, but what have you said you're going to do? How will you set up the trade for the trading day? How do you think through the different permutations of the trade? How do you think through the risk management? How will you manage it? All this type of stuff. I need to go through every single process with you, but you know what I'm saying here. You can have the process and stick to it. Do the things you don't want to, but you know you need to. This is, not to get philosophical on you guys, but this is life in general, right? You have to do things in the short term that are uncomfortable to get long-term gain. Going back to the health scenario, hey, you'd love to sit there and eat that pizza and drink that beer and eat that slice of cake, and maybe that gives you a short-term gain of short-term tasty, its benefits, very nice. But does that get you towards your long-term goal of the 6-pack? It doesn't, right? I know it's an extreme example. You get the idea. And that's the same with trading. Very often we want to take the trade out. The trade's moving in our favor. Oh, there's a real nice, juicy, unrealized P&L there. You want it so bad. You want to get that dopamine hit. You want to close the trade and feel good and go, yeah, I'm a trader. I took a decent money. But you know the process is I hold it to that point there. That's my target. I drag my stop up and I leave them and I see what happens. And so doing the things you don't want to do is the tough bit. And if you can do this a few times, so if you're struggling, let's use that analogy of running trades. If you're struggling, say, to run trades, all you need to do is think yourself, I'm going to run this trade, do the visualization. And then when you do it a few times, that is a massive, massive deposit in the confidence bank, because you go, I can do it. All right, I've done a couple, I've done 2. That's the most I've done. Right, starting point. And you feel so good, you know you do, because you've done something in trading where you felt really good about doing it. And you've gone, well, damn, man, I can actually do it. It sets a new high watermark that can never be taken away from you. And now you can only get better from there. So if you're holding a trade, you say, I'm going to hold it to a 3-day move, I'm going to hold it to target, and you've been struggling, and you do one, you do two, you do four, you do five. You're like, hey, man, I'm confident. Yeah, I can hold trades. I'm now, thoughts and actions, a trader who holds trades to final targets. I'm actually doing it. My process for getting myself prepared is dialed in. You see how this is boosting your confidence. It doesn't matter what the P&L is. You just feel so much better about your trading for doing this and just passing that test that comes your way. And what I mean by this is one of the real kind of I always hate using this word of secret. It's like, oh, there's no secret, but if I was to allow myself to use it once with trading secrets, bleh, but if I was allowed to use it once, the secret, if you like, to building confidence is to get the challenges for you coming at you. And what I mean by this is, let's use that example of holding a trade. You've got a big fat unrealized P&L. You want to take it so bad, your mouse is hovering over that close. Like, oh, I just want to take, oh God, yeah, I just want that P&L. Oh, really well. And you go, no, I said I wasn't going to do it. I said I wasn't going to do it. I'm not going to do it. That's the test. You pass one test, you feel good. You pass two, you pass three, you pass 10, you feel $1,000,000. You're passing those tests, and then there won't be tests anymore. You're like, I don't snatch your profits anymore. And so whatever that test is for you, is it for FOMOing into a deal? You see the price momentum go. Maybe you're one of those guys who kind of sees a 1 minute chart flick up. Oh, I'm going to jump on that for a few ticks, grab a few ticks and run. And you have the urge, you want so much, every fiber in your body wants you that buy button, but you don't. Good for you, because now you've put a big fat deposit in the confidence bank. You've passed the test that's come your way. It could be anything, sticking to your stop, chasing a trade, whatever it might be. There's going to be a test, and you test it every day in trading, almost every day in trading. And if you pass the test, that's how you make those deposits in the confidence bank, whatever the test is for you. And if you think about that and you come into the trading day saying, I'm going to pass the test, I know I'm going to have the urge and desire to do something, but I've said to myself, I'm not, so I am not. Now, as the market does, is more than likely when you take that action, it will be wrong for that specific trade. And you will say, "Oh, I'm holding this trade. I said I wasn't going to take it out until final targets." And you'll sit there and you'll do it, and you'll go, "God, I want to take that trade so badly. I want to take that money. I want that money. I want that money," and you won't do it, and it'll go up and it'll come all the way back and stop you out. That's just the way it is. But you've passed the test. You're not thinking short term. You're not taking the short term dopamine hit. You're thinking, this is how I want to be as a trader, where I'm headed, what my goal is. I want to be a trader who holds trades a little bit longer. I want to be a trader who can sit in trades and work with the position. So I've done that. This one sample size of one is irrelevant. So thinking like that really helps you boost confidence. And it's a free and easy thing to, it's not easy. That's not correct, is it? It's not easy, but it's a simple and free thing to do. You can put yourself, hey, I'm going to do this, and you can say, I'm going to pass the test. And honestly, it can take you a week, and your confidence can be in a completely different place. You're like, look, man, I was tested heavily at a massive unrealized P&L. I didn't take it. This market ripped off, and I normally chase it. I didn't. These tests came in. I had the urge to it. Damn, I had the urge to do it, but I didn't do it because that was what I wanted to do. And just then it's a win-win. You can't lose, because you just position in your mind as, I'm passing the test, making a deposit, confidence. And the good thing about that is, that helps your performance, but also having a high level of confidence, which you build up over time with these deposits. We'll talk on more in a moment. It means that you're able to deal with setbacks much easier, because times when you will take withdrawals out, you will make mistakes, you will do something that dents your confidence. But if the bank is so fat and full, it's not a big deal. It's not going to be an issue. Okay, so each time you act in alignment with the vision of your future self, you make a deposit in the confidence bank. I said it a minute ago, and I wanted to reiterate it. Each time you do that, that's how you build confidence, not the P&L. And I know I'm a broken record here, but if you put yourself in that position of the unrealized P&L's there, I said I'm going to hold the trade. I just want to take that grand. I just want to take that grand, right? You just grab it. You're thinking that P&L is going to boost your confidence, but you know it doesn't, because you feel guilt after that, even though you're at a grand up, 2 grand up, 500 quid up, 100 quid up, whatever it might be. You're there going, the P&L hasn't helped my confidence. If anything, it's taken it away. So you know that actually P&L isn't proportional to confidence. It's doing the right thing that builds the confidence. And if you do the right thing, that then supports the P&L later on. It's a funny dichotomy of trading, but that's the way it is. Wow, what a picture! What a picture I've got here on the slide. This is the hurdle that most can't get over, by the way, because you don't see the results, you don't see the P&L results. So the equity curve is stagnating, the equity curve is still declining, and you go, well, I'm sticking to the rules. I'm holding a trade. I said I would. I'm doing this. You've got to put in your time. You just got to do it. And most of the time, people go, "It's not working for me. I'm going to try something else. I'm gonna take trade." You just, what I said at the very beginning: stick to something, and don't deviate from it. Make course corrections after you stuck with it for a while, and honestly, most traders just can never get over the hurdle because they don't see the P&L results. They wobble. There's a great what's the word I'm looking for here? Not a fable, story, that type of thing. You know what I'm saying? What's the word I'm looking for? Anyway, let's call it a story. There's a story of a Chinese bamboo, and apparently, a Chinese bamboo, it takes many, many months for it to even come out the ground, and then once it comes out the ground, it shoots up at whatever it is, inch a day or something. I'm making these numbers up, but the order of magnitude is correct. And so if you're watering it, nothing's happening, and you give up, ain't gonna happen. But if you water it and water it and water it and believe, I'm getting up every morning to water it, I'm giving it the correct amount of water, eventually it comes out and then it grows. And that's a lot like an equity curve. You water it, you do the right thing, you build the confidence, you feed it, you don't see anything. You're like, it's not working. And most people are giving up. But you're the one getting up every day when you're tired. You're the one getting up when it's raining. You're the one getting up when it's cold, watering it, doing the right things. Confidence is building. I know I'm doing this as my identity now. I'm the person who waters the bamboo. I'm the person who does the right thing in trading. You do it. All of a sudden, bang, it just starts to rip off without you. And it's a little bit like that with P&L in trading. You've got to kind of put the work in. Okay, so it's not going to always be plain sailing, right? You're going to make mistakes. You're a human being. You're going to slip up. You're going to wobble. Just don't fall too far off track if you do. And if you do, here's a 5-step recovery framework. So what I mean by this is, we're not perfect. And I can't stand here and say that I'm a perfect trader. I do everything by the book all the time. I make mistakes, but it's okay because you don't need to be perfect to be a great trader. You can be good enough. You can still be human because that human part of trading is what helps you and helps you kind of get you to where you need to be and helps you become that discretionary trader and use that judgment and use that experience to your advantage. So if you make mistakes, which you will do, you're a trader, I've got a 5-step recovery framework for you. Okay, 5 R's. One is to reset. So admit the mistakes and forgive yourself. You just say, you know what? I made a mistake. I'm going to move on. Because traders like you are too hard on yourself. You're ambitious, you're driven, you want to succeed, you want the next level, the next station in your trading journey, and you'll beat yourself up badly. I know you do. Been there, done it, and fall into the trap myself many times, still now, because we just want more, right? So forgive yourself, reset, and let the frustration of the mistake dissipate. Okay, you have to let it dissipate. Sometimes you can't go under control of how long it will take, but just let it dissipate. Number 2, refocus. Regain the clarity on the future trader you're trying to become. Remember I said, okay, imagine the trader you're trying to be. Regain clarity on that. Number 3, recalibrate. Do I need to make any adjustments to my process, plan, etc.? Most likely the answer is no. But sometimes you go through and go, oh, is that really serving me? That really kind of, maybe not. So just go through, recalibrate, check your process, check your plan. Make sure you don't need to make any changes. Okay. Number 4, re-engage. Get straight back onto the horse. You've got to get straight back into the markets. You can't dwell on a mistake. You can't just not trade. Get back to work. Do your pre-market prep. Do your analysis. Do your high time frame analysis. Do your chart scanning. Whatever you do, process and plan. Process and plan. Forget about the P&L. You're trying to do the process and plan. Number 5, repeat. Right? If you do it again, you trip, you fall over, you get back up. You trip, you fall over, you get back up. You trip, you fall over, you get back up. You just improve, adjust, and adapt each time you're doing this. Right? You reset, you refocus, you recalibrate, you re-engage. You just keep doing this, and this is how you recover. And this is the separator for how many times you get knocked down. Can you get back up again? Every time you do it and you make a mistake and you feel crap about yourself, admit the mistake, forgive yourself, refocus, recalibrate, re-engage, you will feel so much better. And the more you do it, the easier it is, the quicker it is, the fewer the mistakes are, the lesser order of magnitude the mistakes are. It's just a really, really good framework. And listen, you don't have to do this. Steal it if you like. Of course you can. That's what I'm sharing with you. Or make your own. But just have something when you're feeling down, things aren't working for you, your confidence is a little bit drained. You have somewhere to go. You go, my file, my 5-step recovery framework, my 2-step recovery framework. Let's do that. Let's get back on track as quick as possible. Because I don't feel very good about this. I feel pretty crap about that mistake. P&L's not really had a great result from that either. What you don't want to do is get into the spiral of trying to get the money back. Oh, if I get it back, I'll feel great again. You just got to accept this happened and go through the process of getting back on the horse, process, plan, adjustments, tweak. And before you know it, you're back to equity curve highs, right? And this is foolproof for kind of keeping your mind on the right track. Confidence comes from your process, as I've said, and your performance over time. That starts to help. So get total clarity on where you're headed, build a plan that works, you can actually stick to. Too many traders are trying to trade a plan that's just never going to work for them. They've got other obligations and they're just trying to do stuff that's just ineffective. And go back to 3 pillars. They're just trading a strategy that doesn't have edge because they're not there to trade that edge all the time. So a plan that you works for you, you can stick to. Get those thoughts and actions in alignment. If you can think it and you do it, then that's when things really start to kind of happen and things start to kind of become a lot easier for you, become seamless. And you'll know when you're in the groove, right? You've probably been a few times in your trading, in your trading experience or trading journey, should I say. Sometimes things feel easy, like you're just trading okay, you're journaling. It's just a nice groove to be in. Nothing's too forced. There's nothing too much effort required. You're on that little, you're in that sweet spot in the torque zones. And that's a car analogy, where engines on really performing well, decent economy. It's really decently powerful. You're like, yeah, this feels good, man. I'm feathering the throttle. It's really nice. And so, when you're in that zone, try to get yourself in that, not to use the trading in the zone thing from Mark Douglas, which is obviously a book title, but when you're in that zone and you're in there, it feels good to try to get yourself there and use that recovery framework when needed and make your own, but have something that helps you recover because things aren't always going to go your way. And it's important to recognize that with human beings. Okay. Reminder, you can download the Traders Discipline Tracker. If you go to tradersmastermind.com, you can check that out there. Tradersmastermind.com, free discipline tracker. That will help you with your confidence stuff as well. So Google Sheets, things free of charge. You're very welcome to have that. And let's go to Q&A, ladies and gents. If you've got any questions, let me know. Okay, back. All right, any questions? What we've got? Okay, a couple coming through. Any questions are fine. You can listen. I don't claim to be an expert on this, guys. As I've said at the beginning, I hope, but I hope it helps because I know personally that confidence is such an important thing to try to cultivate. It's not easy, but I think it's easier than we think because I think that very often we mistakenly believe it's P&L. I think that's the biggest takeaway. If I can pinpoint something for you guys, it's like, hey, you might be in a situation where the P&L is not where you want it to be. You might be in a situation where you look at that equity curve and you're like, yeah, man, it should be more, And I get it. But if you work on the confidence, you work on the things I've said, then, I really, really do think that it just helps. It just helps support stuff. All right, some questions here. Okay. Espen says, great topic, Mark. Thanks, Espen. Appreciate you, buddy. I'll see you around for a while. Gary, good to see you, pals. Is excellent session. Thank you. Lots of great points. Appreciate that, Gary. Appreciate all your feedback, gentlemen and ladies. Pedro says, you mentioned Market Wizards. Can you expand on that? Yes, Pedro. Market Wizards is a book series by Jack Schwager. His first one was in 1987, I want to say. Last one was 2020. He's done 5, 6 books in the series. They're all worth reading. You've got market wizards, new market wizards, stock market wizards, hedge fund market wizards, unknown market wizards. I might have missed one, but it's interviews with traders. But what is different about this to maybe some of the stuff you might see on YouTube is that Jack Schwager does his due diligence. Most of these guys are, they're proper traders, if you like. They are running CTAs. They are running prop firm, like proper prop firms. They've got track records that Jack Schwager audits and looks at, and he talks about those before he interviews them. So he's not, taking anybody here. So you can kind of say, okay, well, someone in here is legitimate. He's even interviewed someone like Paul Tudor Jones in the very beginning, Marty Schwartz, all these guys. Anyway, the interviews with great traders, and when you listen to those traders and you listen to how they all trade very, very differently. However, they all have that common trait of they're confident in the way that they approach trading. They have standards. They do their certain routines every day. An example might be Linda Raschke was a market wizard. She's a pure technician, right? She doesn't add to trades. She had to trade. She doesn't vary her position size, put it that way. And she hates the word discipline, right? And so what she does, her process that's for her, and that's going through a list of stuff, and she looks through various indicators. And when you look at someone else who says, discipline's everything for me. I kind of need to look at Jason Shapiro, need to look at the Commitment of Traders report, blah blah blah. Both excellent traders, both have at the top of their game, but very, very different approaches. So yeah, well worth reading. Get them on Audible, get them from Amazon, that type of stuff, Pedro. Another one is there's another interview book, and I always forget it because he only did one of them, but it was very, very good. If it comes to me, I'll mention it. Adnan says, could you do a recap on the last points? Sure. Svante, I'll do that, Adnan, in a second. Svante says, great webinar. Thank you. Appreciate that, pal. Michael says, thank you, Mark. Your content, mail or webinar are always very valuable. I appreciate that, Michael. Thank you. Yeah, you guys, I do send out a daily email if you're interested in that. This stuff's resonated with you. I like talking about this stuff because I think it's a needle mover for us as traders. Beth says, thank you so much. Appreciate it. Appreciate it, Pedro. Thank you. Chris says, question from Chris, operational question. Thanks, Mark. Would you recommend to start trading micros so P&L swings are under control and when to switch to minis instead of staying in demos, so having some skin in the game? Yep, Chris, absolutely. Trade very, very small. Get some skin in the game. Then when you feel confident, scale up. There's no point. You're going to pay tuition fee. You may as well pay as little as you possibly can. Pay that learning tuition of very small size. Then when you're ready, scale up your operation. And you'll know when you're ready. And then you have a scaling plan for bringing things up to a certain size. But yeah, you're doing that exactly the right way. Oh gosh, some more questions. You guys like this? Appreciate it. I do appreciate the love. Thank you. My first webinar, great insights. Aaron Marshall, welcome on board to you, pal. Hope it's valuable. Ryan says, how can I tell the difference between a string of losses due to randomness? I know this question is going, Ryan, versus the system not working as I expect it to in those market conditions. I blame most of my losses on randomness, but they fail. But I followed my plan. It's very difficult, Ryan, to know that, and that's something that a lot of traders will have that never-ending question. One thing to do is to work on another strategy in parallel with your existing system. So one of your systems is going, and let's say it's working okay, and goes through a losing streak. I always try to have something else in parallel coming up because I've been forced into positions or situations, should I say 15 years ago, where something's working very, very well. I'm just like, this is it, I've cracked it, and it just stops working, and I go, sugar, what do I do now? And having forced to do something else. So I think as you develop as a trader, you go, I need to kind of be constantly looking and developing new things. And then if it stops working for a bit, you might be like, hey, the conditions aren't right. So you take it, you put it in the file, and you leave it there. You trade the new thing that's working more effectively. Then the conditions shift again. You bring that out, you dust it off. You go, oh, that old faithful can come back out again. And you can you haven't got your eggs all in one basket. I think that's a very good way to approach it. I like approaching that way. It's not for everybody. Some people just like to step back. But I think you get more clarity because then you're not so like, oh my God, that's the end of the world. That system's not working. That's me as a trader. What do I do? What do I do? And you feel so, I get you, right? You feel so uncomfortable. So I think having something else that you're working on developing at the same time means that your resources and efforts are pushed elsewhere as well. Hope that's helped. It's a bit of a waffle, but I think you get what I say it. So Adnan said, last points. I guess you want these, Adnan. Okay, so yeah, confidence comes from your process. Get the clarity on where you're headed. I think that was early slides. Like you need to have that vision of where you want to go as a trader. right? Because if too many traders go, and an analogy I gave was you get into a cab and you go, just drive, take me somewhere. Where? Well, take me somewhere. It's like, well, I can, but you're not going to get you anywhere. You need to know where you're headed, what type of trader you're going to become, um, what you want out of trading, what's your short-term goal, medium-term goal, long-term goal. You need to have that dialed into your sat nav, your internal sat nav. Otherwise, your brain doesn't know what to work towards. You need a trading plan that works for you and your lifestyle, how time you've got to allocate to trading. Too many traders are trying to scalp and day trade when they kind of can't sit there in front of the screens. Maybe you don't want to become a day trader. What's the plan you're trading, and can you actually stick to it? You can't be monitoring markets all night long. Can't be getting up in the middle of the night to do this. That's not the trader you want to become. So if your plan has to rely on that, then that's not an effective plan. So find something that works for you and you can stick to. Thoughts and actions, references, those standards. Okay, I do my pre-market prep without question. I journally trade without question. Read a trading book a month without question. Whatever those standards are to you, you elevate those and you believe you're the trader you're becoming, your actions are aligning. All of a sudden, confidence, 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 ching, 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 ching. You're boosting that confidence, pick your bank up. That just helps you then, trade with much more, calmness, clarity. You're relaxed, your shoulders drop, you're less of a burden, less stress. If you're one of these traders who comes into the screen every day and is like, oh, gotta go make money like that, it's just never gonna work for you. And that's not confidence, that's anxiety. You want to get to a point where you're calmly confident. It's like, I'll see the trade when it comes to me. There's no rush. I don't see anything at the moment. I'll wait for it. I know what I kind of want to look for. Let's wait and see what happens. And you kind of relax and you look at the market. You go, you know what? I'm going to take that if that dips another 5 minutes or another 10 minutes. Draw my line, get your levels, get it ready. Trade comes, see the trigger, pull the trigger, put your stop in. It's just a nice, steady flow. That's what you want to get to. And then that 5-step recovery framework that I talked about, when you make a mistake, you do something you shouldn't have done, you hold your hands up and you go, yeah, you know what? I made an error. Let the emotion dissipate because you feel like crap, don't you? You feel like crap and you get angry, you get frustrated. That's got to dissipate first. And so you can go through the 5 R's whilst that's dissipating, admit it, refocus, say, this is where I'm headed. This is what I'm trying to do. This is part of the journey. I'm being tested. Keep going, recalibrate. Do I need to make any adjustments? Is something glaringly obvious? Be careful with making too many massive changes. Get straight back on, do your process, stick to your plan, focus on the plan, focus on the process, not the P&L. You don't want to be distracted by the P&L. Worry about that later. That's something to worry about when you have the experience and it becomes a more important metric. When you're a developing trader, process plan, process plan. And if you do it again, just keep getting up, getting up, getting up, and that will help you loads. Okay, ladies and gents, shall we call it leaving there? I think we have, let me just double check I've got any. Oh, one more question here is from Grant. Grant says, great talk, Mark. Thank you, Grant. Appreciate that. That's a surname, Akiyama. Grant Akiyama. That's a great surname. Great talk, Mark. What about the opposite side of this, overconfidence in trading? Yeah, I think that's a very good point, Grant. Actually, overconfidence in trading is, I don't think, how do I say this without sounding like a, because I definitely have an ego with trading because the markets said, oh, is that an ego smell from you? Well, step this way, sir, because we've got a special room for traders with egos. Oh, yes, the set the velvet rope, come in you go. You think you're a big trader, do you? In you come, door shuts, and the markets teach you a lesson. So not an ego, but I think as long as you are managing risk, right? Overconfidence comes when you are not managing risk effectively, when you're trading position sizes that are too big for your trading account size. That's overconfidence. Okay. And if you get to that point, you've got to be careful because the market will smell it a mile off. It goes, oh, he's taking more size than he should be on this. He's not using risk management. He's not using a stop. Of course, you're going to get stopped out. Of course, you're going to get hit. But as long as you're managing the risk, as long as you're trading in accordance with your rules, I don't think you can be overconfident in the trade because you're like, this trade's going to go up. I've seen this happen time and time again. I've seen this movie before. I'm in, my risk is controlled, my position size is correct. It can't harm you at that point, the market. Of course, you can get slippage and you can get gaps and all this type of stuff. But theoretically, I think it's fine. Now, when you've had a good run of trading, you get not say I've got to be careful what I say here because it's going to go on YouTube, but let's say you get God mode. It's a little bit more crude than that. The slang that goes around with trading. Let's say you get into God mode. You're like, oh, I think I can do no wrong. The market will smell that and it will normally whack you, right? So you've got to be careful that you're not over trading, taking too many trades, you're not over position sizing, not being a little bit blasé with risk management. But as long as those three are in check, then I think it's good. Now, me personally, when I have a good run, I'm always very careful. I'm always very careful because my head will go, "Ooh, do you having a good run? You think of this? Wait. Just be careful, just relax, calm things down a little bit. Just reset your thinking. So I think it does play an impact, but perhaps not so much as long as you've got the risk managed and you're trading in accordance with the process. Again, that's why the standards and process and routines are so important, because you fall back to those. If you struggle, you fall back to those. If you're elevated, you think you're kind of the trading god, you'll fall back to those. As long as those are there, there's always going to be that kind of safety net. Okay, good questions. Thank you, ladies and gents, for those. Appreciate that. That's why I like doing these live. People are there and you're listening and you're getting value from it. So that's all I can ask. I can try and share with you things I think are useful. And if you take away a few things that are going to help you improve your trading, it is job done. Next week, election special. Really looking forward to sharing that with you. And then obviously tomorrow you've got, I think Mike Brown's doing the Pepperstone Talks election one as well. So if you want to trade the election, you're interested in that, interested in how people think, how people different ways of approaching it, how to dissect stuff, you might get some ideas from that. Anyway, appreciate you all. Thank you so much. Take care. Bye-bye.